Hey folks, CA Rachna Ranade here, and I welcome you all to yet another live stream, back to back live stream. Yesterday only I had done the 5 million special live stream, but today there's a reason to come live. Typically on Fridays, I do release a pre recorded video, but today I was in a shoot for almost 5-6 hours back to back, and even previous few days I was out of Pune. I was shooting whatever, so I didn't find time to record this video, but I said whatever analysis me and my team have done, I should be sharing it with you all because it's a really, really, really interesting analysis of one of the companies which has been like very much kind of a talk of the town, which is the Ola Electric IPO post listing story. Uh, I'm sure many people are going to have a lot of question marks as to an IPO which was barely subscribed. Like I remember somewhere around 4 times. It got listed at the price which was almost close to the issue price, so almost at par listing, but post listing the stock has zoomed up like anything. So if I were to quickly share my screen, I can just share the entire screen and tell you that that's how the stock looks post listing. So this is almost at par listing, around 75 rupees, and from here to where it closed today, it is up by more than 75% in what, 1 2 3 4 5 trading sessions. Kya baat hai? And if you see, even today Ola has hit an upper circuit. So I'm sure there are a lot of people who are really keen to know that what is the magic with Ola. Why have people suddenly given a big thumbs up to Ola? Why is the price moving up madly? Because if you have seen the IPO videos of Ola, so many people, including me, have talked about the losses that the company has. In fact, in my IPO video, I had mentioned that it is mentioned in their RHP that the company may not become profitable in the foreseeable future. I'm not saying that, management had said that in the RHP, and that's what I had mentioned in the IPO video, right? Uh, just in case if you have not seen the IPO video, Pooja, please share the link of the IPO video in the chat section. Also, we'll paste the link of that IPO video in the comment section. Sorry, in the pinned comment and in the description box, right? But first comes first, let us try and understand some very, very basic points about Ola. So I want 100% attention for the next almost 8-9 minutes, 7-8 minutes maybe, because I'm sure you're going to learn a lot of things about Ola and you are going to enjoy this next 7-8 minutes. So please pay maximum attention. Avoid chatting right now. Just pay full attention to whatever I'm saying. Okay. So let's understand about a very important point, which is Ola Electric Q1 results. Now, for whom is this video primarily being, who is my target audience right now? Who should be watching this part? If you are a serious investor, you should be definitely watching this. But if you are an intraday trader, BTST trader, buy today, sell tomorrow, this video is not for you. Because whatever I'm telling about Ola Electric, my thought process about it, based absolutely on the numbers, based absolutely on the investor presentation that they have done, based on the con call that they have, con call transcript, we have gone through the con call transcript. It's purely based on that. It's purely based on a at least medium term view to a longer term view. This is not about short term, ultra short term. So if you are any trader, till then take care. Jai Hind, bye bye. Okay. But if you are a serious investor, this one is definitely for you. So in this video, it's going to be a purely fundamental analysis video for educational purpose, medium to long term. No technical analysis will be discussed. Logic is also very simple. We can't do any technical analysis based on like 4 or 5 days or 6 days of candles. Nice technical analysis I'm talking about. Okay. So, and if you know my style of technical analysis as well, I don't see 5-minute candle and 15-minute candle. The minimum time frame that I check is 1 day because I'm not an intraday trader. Okay. So for me, technical analysis for this one doesn't make any sense. So we are going to purely understand about fundamentals. This stock came more into limelight, especially after HSBC, which is a global brokerage firm, initiated coverage on Ola IPO after its Q1 results and con call. And what they have mentioned is that, of course, they have given a buy rating, and they believe that EV manufacturing costs may fall significantly by FY 27-28, but the cost of ICE, that is internal combustion engines, may go up due to emission standards. That is what HSBC is saying. That's what, not what I am saying. I am not initiating a buy call. HSBC is initiating a buy call. Be very clear on that. Okay. So the moment a big brokerage house initiates some kind of report, stock generally comes in limelight. Okay, and that is what happened with Ola Electric, especially post Q1 results and con call. Now we have to understand what were the key highlight points of the Q1 results and the con call, because we are not going to read through each and every point detail one by one. We have done that. Me and my team have done that. But for you, we can just go on with the basic highlights, right? What were the key points? What were the few hits and misses in Q1 is what. Now, if you see here, we are going to compare Q1 FY24 and Q1 FY25. Okay, Q1 FY25 is April to June 2024-25 financial year. That's why we say Q1 FY25. And we are going to compare this with Q1 FY24, that is April to June 2023-24 as a financial year. Now, if you see here, total income has gone up from 1,279 crores to 1,718 crores, up 34%. EBITDA, the earnings before interest, tax, depreciation, amortization, the losses have reduced from 182 crores to 131 crores. Okay. So comparison, it's not like from this. Instead of that, I will say that the losses were at 182 crores in Q1 FY24. Now the losses in this quarter, first quarter, are 131 crores. So in comparison with the YOY quarter, it's better as far as EBITDA is concerned. Look at the PAT. PAT has gone up from 267 crores. So again, Q1 FY24, previous quarter, 1 year quarter, 1 year ago wala quarter, Q1 quarter, last previous year was 267 crores of PAT. And this quarter, it is 347 crores of PAT, both in negative. So basically, loss has increased. Profits have not increased. Losses have increased. And up by how much? Almost 30%. So it is as good as revenue up 34% and losses up almost 30%. Okay. In spite of this, what on earth is the correlation between these financial results and the stock price of Ola Electric? And for that, we need to understand that are there some points which can't be seen just by reading this slide? So definitely yes. We'll understand few more points from their con call and from their investor presentation. So they have very clearly mentioned that this was the highest ever quarterly revenue in this quarter and on the back of highest ever deliveries. How many units have they sold? They have sold 1,25,198 units versus 70,575 units delivered in the same period last quarter. In fact, their market share has also gone up. And further, if you see here, they mention themselves as India's best selling EV brand, from 11% to 23, 27, and now they're at 49% market share. So if I were to again compare, Q1 FY24 market share was 31% and Q1 FY25 market share is 49%. Now talking about the EBITDA, we understood that EBITDA has come down. The losses I'm talking about. Okay, losses have shrunk from, so if I were to again go here, losses have shrunk from minus 182 crores in the Q1 FY24, and if I were to understand Q1 FY25, it's minus 131. Okay, so if I were to do a comparison, yes, better quarter is what I can say. But if I were to understand consolidated EBITDA margin also, it has improved to minus 7.6% versus minus 14.2%. Please don't miss out those minuses. Okay, so still at EBITDA level, company is at 7.6% EBITDA margin. Minus again I'm talking about. Okay, now wait. They have also very clearly mentioned that, I've talked about consolidated loss after tax. I've already talked about that. Now there is something really interesting in this EBITDA margin. Okay, now what have they mentioned? Total EBITDA margin is minus 7.6%, and which has come down from minus 14.2% to minus 7.6%. But automotive segment EBITDA has come down from minus 8.29% to minus 1.97%. Okay, now what does this mean? It means that in the automotive segment, which is their largest segment, accounting for more than 99% of their revenue, their EBITDA margin has improved drastically from a loss of 8.29% to a loss of less than 2%. This was really cheered by the market, but we need to understand this in a little bit more detail. Something really interesting data is coming towards the end of this specific discussion, so please stay on tuned. You'll understand few more insights on this as well. Okay, but for the time being, I hope you have understood good growth in revenue, good volume growth, increasing market share. EBITDA margin pay, the losses have shrunk, but loss after tax has increased ultimately by almost 30%. Now we have to understand how come their EBITDA margin improved, and for that they have mentioned. Okay, again these are screenshots of their of their con call transcript. So what they have mentioned is that yes, we have reduced some of their direct costs and indirect costs, and they were able to do that with the help of some technology, AI, digitization, which reduced their overall distribution cost. That is the reason what they have given how their EBITDA margin improved. Okay. Now, one more interesting update that they have given is about their motorcycle portfolio. So, if you have watched my IPO video, they have mentioned that they are going to launch new motorcycles. Okay, currently they are into EV scooters, is what I can say. Okay, now they had mentioned during in their RHP that they are going to launch motorcycles. But on 15th of August, that is yesterday itself, they have started taking orders, pre-booking basically. Pre-booking has started yesterday, of which uh, of which motorcycles they have launched. Its all new Roadster series of motorcycles: Roadster, Roadster X, and Roadster Pro. Roadster deliveries are expected to start from Q4 FY25. Roadster X again so by the end of this financial year, Roadster and Roadster X deliveries will be given, and Roadster Pro deliveries will be given Q4 FY26. Okay, so June to March 2026. All so not at the end of this financial year, at the end of next financial year. Okay, they've also just in case if you are interested to see how do they look, that's how Roadster looks. That's how Roadster Pro looks. Interesting designs is what I can definitely say. Anyways, they have also teased about two upcoming models, which is Sportster and Arrowhead. Okay, now they have also mentioned something really interesting. What is the interesting point? The interesting point is about their warranties. I'm sure everyone knows that for an EV, the major cost of an EV is batteries. One of the major costs is battery cost. And earlier, they used to offer a warranty of their battery of 3 years or 40,000 kilometers, whichever is earlier. Okay. But starting February 2024, they have started giving a warranty of 8 years or 80,000 kilometers, whichever is earlier. Okay. Now, being a chartered accountant, first thing we were taught was that whenever company sells any product, you have to understand what is the warranty period and how much people can claim if something goes wrong with the product during the warranty period. For that, have you made enough provisions or not? All these things we have to check. And in their RHP, they have mentioned that we are yet to complete a full warranty cycle. So, be it these 3 years or 40,000 kilometers, they have not even completed one full warranty cycle. And they have mentioned in their RHP that their warranty reserve may be insufficient to cover future warranty claims, which could adversely affect their financial condition and results of operations. So, again, management itself is mentioning this, that their warranty reserves may be insufficient. So we have to understand all these basic points. What people do, or this stock is hitting upper circuit, let's enter. Understand the risks involved also. There are going to be good points and bad points for every company. Okay, as we appreciate the price movement, we should also understand what are the risks involved. So be sure about this. In fact, now they have also increased their warranty from 3 years to 8 years and from 40,000 kilometers to 80,000 kilometers. So they are increasing their warranty period. If the claims start coming to a bigger tune, it may impact the company. And they have only mentioned that which could adversely affect the financial condition and results of the operations. Okay. So I hope we have very clearly understood about warranties as well. Now going ahead, important point again, if I'm talking about their cell division, so two major divisions. One is rather than saying divisions, I should say segment. One segment is automotive, one segment is batteries. Automotive is almost, as I mentioned, more than 99%, and batteries, of course, has to be less than a percent. But they have unveiled the Bharat battery cell. So this is how it looks like. To the best of my knowledge, whatever vehicles they are selling right now, in that this whatever they are manufacturing in house, that is not yet being used. To what I remember reading, currently I think they import batteries, and in the future they might replace these batteries with the in-house made batteries, which will obviously reduce their costs. Right now, what will be the benefit of all these new cells? They have mentioned again that they promise faster charging time and also improve the range. So that is again very important for any EV, how much I can drive, how much I can ride with a single charge. So faster charging and improved range, that will be definitely a good point for the company again. So this is cell division, as I mentioned. See how much is the revenue Q1 FY25, 5 crores. And for automotive it is 1722 crores. Okay, so tell me two major divisions, 5 crore, 1722 crores. So if I were to add this up, it should be 1727 crores of total revenue. But if you check the consolidated income, instead of 1727, their consolidated revenue is 1718. So again, it's for those who are not aware about all these things. This is called as inter-segment elimination. Again, I went back to my CA days. We used to do this inter-segmental reporting, this, that. But a little bit interesting, right? I'm not sure how many of you have seen this. Two major segments, automotive, cell. Automotive cut top line, that is revenue, is 1722 crores, but consolidation of this is 1718 crores. Okay, lower than this. So this is called as inter-segment elimination. So if one segment has sold to other, some inter-segmental revenue is reduced. We'll not go into the accounting, but this is just something different you might not have seen. That is the reason why I thought of showing this to you. One more important point is that if you have a look at their EBITDA, you will understand that consolidated EBITDA is 131 crores. Super important point. Listen to this. Consolidated EBITDA is 131 crores minus, of course, loss. Automotive segment loss is just minus 34 crores. And that is the reason why they said, "Arey, we are almost closing to break even." Of course, still minus 2%, almost 1.97% EBITDA margin at automotive segment. Okay. So that is where everyone got excited. Arey, this is the main segment. This contributes to more than 99% of the revenue. And if this is if this is closing to break even, then done. Mamula done ho to aur badhiya. So, but understand now, automotive is accounting for 34 crores of loss. Cell is accounting for 19 crores of loss. So 34 plus 19, 53, correct? And this is not totaling up. Nowhere close to 131 crores. So again, for this, you have to read the quarterly reports. You have to read the management con call. And even when we saw this for the first time, we were like, kya ho gaya? So unallocated expenses are amounting to almost 75 crores. They'll not come into the segmental reporting. Whenever they mention this, I'll go back to this slide. Whenever they are going to mention this, that Ola ka automotive segment posted a strong improvement in EBITDA. This is a major segment, and this is at just minus 1.97%. We'll be like, this is the major thing, and done. So best. But you have to understand that EBITDA, this is only minus 34 crores. This is minus 19 crores. Total is minus 131 crores. Why? Two things. 3 crores intersegmental chhod do. Intersegmental enumeration. One big expense is unallocable expense of 75 crores. Okay. Now, what is the 75 crores? When I again read this in one of the notes, I found this in the management con call transcript also, it is very clearly mentioned that this 75 crores, whatever it is mainly because of something like large corporate costs, corporate teams, finance teams. So something like, you can imagine, like salary of CFO, let us say, as an example, right? Finance team, salary of CFO. That is not allocated only to automotive division or cell division. That will go to unallocated expenses. You might be like, Rachna, why are you telling so much in detail? Reason is very simple. I personally, whenever I'm doing analysis of any company, will I give importance to segmental profitability, segmental EBITDA? Yes. But I give way higher weightage to the total EBITDA, whether total EBITDA is at profit level or loss level. At PAT, very important, at PAT it is profitable or loss making. And if Ola Electric losses have gone up by 30%, I'm going to be a little bit cautious, okay, as an investor. So today I'm here to just tell you whatever is available in the public domain and how you have to interpret this, how you have to understand what is given here, okay. Now, why am I telling this to you? See, I'm not here to tell what will happen with the stock tomorrow. In spite of whatever I'm telling you, could there be a possibility that the stock hits upper circuit back to back for 2-3 days? I don't know. Possible. How do I know about it? I don't know what is going to happen tomorrow. I don't know what is going to happen day after tomorrow. I'm telling you right away, because there are going to be some people who will be like, "Arey, Rachna ko itna bhi nahi samjha." No, I can't tell you what is going to happen in 1 or 2 days, but a person who is not able to learn from what has happened in the past is not a good learner, is what I believe. Ola Electric is really doing fantastic because it's like based on the EV theme, and that is the reason why so many people are really interested in this. Why did I say they're doing fantastic thing? Because I think the whole make in India ka whole, main point, if they are going to manufacture this cell in India. So I'm really happy about that. No doubts on that. But one is emotion and one is finance, right? Based on finances, I have to understand that this being kind of a new age category company. Why am I saying new age? Riding on the EV theme. I have to compare it with also what has happened with other EV players. I have to compare it with even other new age companies who were in losses when their IPO came. Okay, so careful. What did I say? Ola is also like a new age thing related company. Why EV is the new age thing theme? Ideally, what I should do, I should learn from whatever has happened in the past. Were there other companies who were in this new age category, and how did markets react to them? So if you see here, PB FinTech, look at first month, fantastic, and you know what happened after that, and it took so much time to recover from these lows. This is PB FinTech for you. Look at Zomato, 1, 2, 3, 4, 5 months back to back, dream run. You know what happened next? Okay, but you will be like, Rachna, kya baat kar rahi ho? You only discussed this video on your birthday only, and now you are saying, giving example of Zomato. See what happened. This that. Understand? That's what I'm trying to tell you. When the company was in losses, and back to back quarters, the company was in losses. Markets at some point in time did not respect the price, and that is the reason why stock tanked so much. This was the lowest point. So this is June, May. So this is like March could be one of the lowest, or I can say somewhere here could be one of the lowest. But March is also pretty much kind of lows. And what happened is that in June, it was the first time that the company became profitable at PAT level. So if you want to see this just as an example, I'm going to give you an example of Zomato. And if you have a look at this, see here, June was the first quarter where at PAT level it became profitable. Till then, look at the losses of Zomato. And since then, 2 crore profit, 36 crore, 138 crore, 175 crore, and 253 crore. These are quarterly profits that I'm mentioning. So I hope you're understanding the point that I'm trying to explain you. Both these stocks, just to give you an example, when the company was in losses, at some point in time, the prices started to decline and they actually started going up. I gave the example of Zomato with the correlation of their quarterly profit as well. That is when the price started to get some respect. Okay, so all in all, after going through all of these things, I just thought of going through their con call again and see when could Ola Electric become profitable. So again, I'm showing you a screenshot from their August con call. What has the management mentioned? They are saying that, so we are today not giving very clear timelines on when the consolidated EBITDA or profitability break even happens, but actually gross margins should see continuous improvement with the sell also. EBITDA margins might be a twin action. Automotive continues to improve. So automotive continues to improve, fantastic. With sell, EBITDA margins may improve, fantastic. But management is saying, even today, we are not giving very clear guidelines on consolidated EBITDA or profitability break-even happens. So I'll tell you what I, as a normal long-term investor, how do I look at things? If I'm a long-term investor with comparatively limited money, I'll tell you my thought process. Okay, everyone can have their own thought process. If you love Ola, your choice. If you don't love Ola, your choice. I'm telling you my thought process. So if I'm an investor with comparatively limited funds, being a fundamental investor primarily and then a technical analysis investor, based on fundamental analysis, I would ideally go ahead with companies which are healthy in their financials. And by healthy, I mean PAT should be there and at good levels. Okay, I would not go ahead with a company which is not even making profits at EBITDA level, and PAT level ka to baad mein, first EBITDA level at least profitability, and then at profitability at PAT level. Okay, so that is what my thought process is. Please let me know even what is your thought process, because why I thought of making a video on this, I'll tell you a simple logic behind this. Logic is that people buy in FOMO, and I've seen that up close. Just because the stock is rising, people will blindly start investing. Arey, 20% upar gaya, arey, 15%, I'm missing the bus, this, that, right? So people may buy in FOMO and may regret at a later stage. So I'm again, I'm not nothing personal against this company, right? What I'm trying to do is that just trying to dissect the con call for you and just making you aware that we have seen instances in the past where company was back to back losses at EBITDA and at PAT level continuous quarters. Markets at some point in time have disrespected the price and the prices have gone down sharply. Okay, so if I am an investor with limited capital, I would definitely search for fundamentally strong companies, and there are so many choices in the market, right? Paytm is also an example, is what I'm getting in the comment section. Absolutely. And I understand these are not I mean, some people can say, how can you compare Ola Electric and Paytm and Ola Electric and Zomato and Ola Electric and other PV fintech and Lizard? As I mentioned, two things. One, based on a new age theme, and number two, being in losses. Okay, these are the only two things why I'm comparing. Even I know that during their RHP, they have given their listed peers as something like Bajaj, Hero Motocorp. I know that, but I personally feel that uh, you know uh, comparing an Ola Electric with Hero Motocorp or comparing Ola Electric with Bajaj, I personally don't resonate with that. Okay, so I thought of just sharing these fundamentals with you all. Please share me your thoughts as well. What do you feel? If you have some different take, very happy to know about that. And just sort of sharing this with you all. And whenever you're taking any decisions, please take a decision which is an informed decision, is what I want to tell you. Right. So I'll see you in the next live stream. Till then, take care. Jai Hind and bye bye.